The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. Well, we've got a bunch of things happening in the commodity markets this morning. Having a little bit of a bounce in stocks after the big sell-off Friday. I don't think it's going to mean much, but we'll have to, give it a little bit of time to see it unfold. But we'll do the gold first. The first chart that I posted in here is from the CFTC. It shows that the number of short positions that came in towards the end. These are people that came into the party at the very end on the short side of gold. These are hedge funds. Remember, folks, some of these guys don't have any skin in the game. They're trading other people's money, so it's a lot different than trading your own. Now, if you'll notice on this chart that the high, when back in September of 2011, when gold was $1,932 an ounce, these folks were long. And now they're net short. And this is the largest net short. The fact is, it's the first net short position that the hedge funds have had ever since they started keeping this data, which is way back in 2000. Remember, gold bottomed in 2001 at $260, went to $1,932, and now we're back at the $1,090 level. But we've got this tremendous short position here. So that's one of the things that I wanted to go through this morning and talk to you about. But before we do that, we've had a little discussion in the den from our good friend, Mr. Z, and we were talking about the soybean market. And I think we really need to take a quick look at both soybeans and corn, because we are at some real critical levels here that is going to make it really, really interesting. Now, the first one we're going to do here is the November soybean contract. As you recall, we were a little bit bullish down there at the $9.03 per bushel. It rallied up to $10.40, and now we pulled back. Yesterday's low was an exact 786 retracement to the exact tick. I mean, 931 was the 786, and the low in the beans was 931.5. So it was spot on. We've had a little bit of a rally from there. So this is the spot. If you're interested, you might have a chance to be looking at the soybeans, from the long side. So who knows if that's the case. Now, I'm going to add just a little bit of flavor to this next chart, because we've talked about this several times. People have always asked me for some examples and stuff, and this is going to be a spot-on perfect one, but it's also setting right at the 20-man line. You can see those highs from way back in November, January, March, and look where that line comes in yesterday, exactly at the 786, touching that long-term downtrend line, and that usually acts like a fulcrum. So what we'll be watching now is for a pretty good rally in soybeans. They were down 10 days in a row as of yesterday, stopping directly on that line. So this is one of the things that we want to keep an eye on very, very closely, because the risk here in beans is really small. Because at that 931 level, you certainly didn't have to risk very much. We've rallied, 12 cents a bushel, since that, but that's still a little bit early. Now, if we switch over to the corn and we take a look at the corn market, we're going to see something very, very similar, where the corn is pulling down to a 61% retracement of this move that we've had so far. Give me 1 second here. Get this up in here so we can all see it. You'll notice that the corn is doing at the same time that the beans are. It's pulling back exactly to that 20-man line, which happens to be a 61% retracement of the low from September. And it's a 786 retracement of the low from May. So we've got a really strong spot here to possibly take a look at the long side of corn. So we're going to watch that really closely here over these next few days. Now, we have a question here in the den about the gold, and the question is, if they are advertised hedge fund short, then the gold bottom is all but in. And that's what we're saying here, Mike, is the fact that we have so many people that are net short gold now that this is where you could get this tremendous rally from. Now, let me just bring up this gold chart just to show you, where we are, on the scale here, to take a look at it, because this is really, it's going to be, let's just put the daily in first. And we'll just put this up here. And all I'm looking for here is about a $100 to $200 rally. That's all I'm looking for in the gold, because we're in a bear market. I don't think there's any question about that, because we've been dropping so much. But if we take a look at the gold daily, we were looking at targets down there at 1068. We got down 1069. We got down to 1071, and then we had a hammer candle, which is one of the more bullish of all of the candles that you can have in candlestick charting. So that's another reason to think that's what we could be happening. Now, how much the last time we had a candle pattern, if you look way back in November, we had one there, and the market rallied from 1140 to 320. It rallied $180 an ounce, $18,000. And that's, is that right? Yeah, $18,000. So just a 61% rally back on this move, going back from the old high we made at the high of the year. If that comes in, that'll take you to 1214. That's $120 from where we are now. That's $12,000. We could very easily get to that point without any trouble at all. So this is why I'm looking to try to get long some gold here for you folks to see if will catch this turn. First of all, you're not going to have to risk very much, because that's pretty much a sold out market. But that doesn't mean sold out markets can't go a whole lot lower. That's absolutely the truth. Now, if we look at the shorter term pattern in the gold, we have a real interesting one here, because we made a butterfly pattern on the bottom. And now we have a potential for a Gartley buy pattern at the 1085 level. That will come in right spot on. If you'll give me a second here to show this, and we'll get it up here. This would be the spot to look at it. Look at gold around the 1085. We made our bottom 5 days ago on the 23rd, and now we're pulling back. I believe we've had lower highs now for quite a while. We had lower highs on the 20th, 21st, 23rd, and yesterday on the 27th. So we needed to get it above 1107 to even think that it's got a possibility of turning, to the upside. But I would rather buy on a pullback here on this Gartley pattern at 1085, because buying at 1085, you're risking about 12 bucks. 12 bucks an ounce, you're risking about $1,200 to potentially catch a move that could be, very, very substantial. So that's the key to what I'm watching here in the gold market. But that open interest, when you see something like that, you have to you really got to pay attention to that, because that means that something big is happening. You guys don't remember this. I know some of you do, because we talked about it so much 4 years ago. But back in September, when gold was making that high at 1932, we were screaming that this was really a short covering rally. You had every single sign in the world that gold was making a top up there, because you had the market going into new high in both gold and silver, with silver reaching 49.50 an ounce, I believe, and gold trading at 1932, and it was going up with a drop in open interest. There were no new buyers coming in, folks. The only way the market can go up is when shorts to cover, and when shorts cover, that's it. And as soon as they're done covering, there's a vacuum in the market, and that's what happens. The same thing happens on the reverse side. When the shorts are coming in, pumping it and pumping it and pumping it, and there's nobody left to sell it to down there, there's the only thing you can do is act like a buoy and just pop right up. So that's what we're potentially looking at here in the gold. I guess I shouldn't get too excited about this stuff, but I'm very interested in trying to get long this market. So that's my reason for my enthusiasm, that I'm trying to look at here. We've had some pretty good bottoms in palladium and also in platinum. and they've had some retests here also. But we got to keep an eye on this because you don't want to be short gold in here. The whole world, you don't want to be at the party when everybody's wearing the same costume, because that's not a good thing to have happen. So keep in mind that that's one of the things that you have to worry about as you go through this. Now, we have another market that's at the proverbial moment of truth, and that is our crude oil market. Give me a second here. Going to run out of things to say. I'm covering them too fast. Hold on a second. We'll see where we are. You'll see here that we are, give me 1 second, and we will be right on here. We are at the 786 retracement in the nearby crude oil contract. There you go, and it is spot on right at the 786 down there this morning. Hit it to the exact penny. We rallied about $1 a barrel. So I'd be watching for a potential pullback here on the hourly chart. If you haven't got long this, is to try to buy the crude oil, because it's at the last bastion of support. If it doesn't hold the 786, folks, we're going down to the 127, and that takes us all the way down to $37 a barrel. And if that doesn't hold it, the 1.618 takes us down to $29 a barrel. So we're at really, really strong support here in the crude oil today. There's just no other way to look at it. And so this is what we're keeping an eye on. We haven't taken out yesterday's highs yet. We're attempting to. We've reached the 786 of that, but that comes in at 48. We really need it to get above there. And if you're short-term trading, keep an eye on the pullback here at the 47 level. It's about 20 cents from where it is, because that would be a little 61% pullback of this early morning range that we had, and that would be a spot for a very, very low risk entry on this. So that's what we're keeping an eye here on crude. We're watching the gold. Silver is the same thing. Let me get the silver up here, and we'll show you the same chart in silver, because it's pretty much the just a second here. I've got to get it up here. Hold on a second. The silver is acting. It's a little less bullish than gold right now, but it's the same pattern that we're looking at. And if you'll give me a second, there we go. And we'd like to see silver get down to about the, get the letter. See, the silver is actually hasn't even made the 61% retracement. It certainly tried. Oh, it did. Sorry. Oh, no, wait a minute. No, it hasn't. This thing is just too sensitive. I just hate this thing. Yes, we did make it. No, it didn't either. This thing is just too darn sensitive. And but this little tool that I use that gives the Fibonacci retracements, we missed the 61% retracement in the silver by just a couple of cents. That came in at 14.49, and so we're thinking if it's going to see if this is going to be a bottom in here. But you gotta think of the gold and silver from the long side, if nothing else, other than a bounce. You know, maybe it's only a $5,000 bounce, but it's going to bounce. It's certainly got all the warning signs are there, boys and girls. Take a little break here, pay a few bills. Stock market's going to open a little higher, it looks like.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Plus. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're going to take a look at a few cross rates here. We're going to look at the euro versus the U.S. dollar. But before I do that, let me do a little bit of the old buyer beware, caveat emptor. You know, when I talk about a potential bottom in silver and gold in here, that's exactly what it is, potential. There's nothing that's 100% true in these markets, and pattern recognition is based on probability, not certainty. So when I'm looking for a buy here in gold and silver, you know, I have the flexibility of moving very, very quickly. However, between 24 hours from the time where I'm on and when what happens tomorrow, a lot of different things can change. So you must always protect yourself, especially in markets that we have now, because these things are so very, very starting to get more volatile, and we haven't even begun to see the volatility that's going to be coming. It's going to knock it off the charts. It's going to scare people that said the VIX index was, had no value at all. It's going to really, really scare people. It'll probably scare me, and I get scared easily. So who knows? We'll wait and see. Okay, we're going to take a look at the euro here, and this is a 4-hour chart posted over the last month. And as you can see, we've been in a downtrend. During this month, we've had two perfect Gartleys. You can see them. I've put them into the chart. The first one occurred up in that 104, 1114 area. And then, the last one we had was yesterday when we reached up to the 111 and 111.30 level, which was a perfect 786 retracement of the high 4 days ago. And that sets up another, lower low here in the euro over the next maybe 5 or 6 days. And then we'll see, how the trend is going to unfold. However, with the euro, there are a lot of patterns saying that it wants to go to 99 or par at least, and possibly lower than that. But that's what it's showing on the long-term weekly charts. And not only that, since the euro bottomed in March, it rallied 10 points, which is a, $10,000 move, which is huge if you caught some of that. But it's really gone nowhere. I mean, if it were really a major bottom, it would have backed off a little bit and then took the highs out. But all we've had now is lower highs in the euro, all along. So this is still in a downtrend. Even though we've had some pretty good rallies. So this is what we're trying to do: is you sell downtrends and buy uptrends. That's that's the bottom line of what we're trying to do. Now, the next one we want to take a look at, of course, is let's take a look at the Australian dollar here, because it has a lot of things telling us that we could be at a major bottom here in this Australian dollar. We've completed the big ABCD pattern going back from January. That completes the yearly low. And as you can see now that we have had a very strong day today, with the market making a slightly lower low, and now it's made a slightly higher high. So we've had an outside day in the Australian dollar, which is in itself a positive thing, because that means the possibility that we have this coming in with the with maybe a rally in commodity prices, and that's what it would be, is a rally. That's just nothing more than that, folks. This is a situation where we've got a whole lot of things that are telling us that this thing doesn't really want to go very much higher, but we are very, very oversold. Now, we're going to take a look here at the Aussie for just a second here, because it's so important for crude oil and stuff. But we are right near the 786. We're within about 200 pips of the low in the S&P. But as you can see from that daily chart, we've completed the bigger one on the daily that is quite important, and we're right at the 786 on the crude oil. So this is where we should get our bottom. This is where the wagons have been circled, and we're going to see if we can stand this onslaught of bears here in the crude oil market and get some type of a bounce going. And the bounce could last $5 a barrel. It could last $3 a barrel. We don't know, but we're in the area where crude oil should be looked at from the long side because of the patterns, and also looking at the one of the cross rates that is very, very instrumental to this, which is the Australian dollar. And then the other cross rate that is very important to the Australian dollar and also has a very interesting pattern is the New Zealand dollar. And we'll take a look at here, and you'll see that in the New Zealand dollar, we went down and we took out the low of 2010 by just about 30 pips, down around the 65 and change level, and now we've had a 150 pip rally. So that's telling us that there were no sellers down there when the market made new lows. That in itself, you'd have been a spot to take your short off, but we'll see. All right, we'll take a break here, stock market opening, and we'll see what the opening figures bring us.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're taking a look now at the Treasury bonds. First of all, that's not true. We're going to take a look at the German bond first because I wanted to point out this 10-day rally that we've had. You can see the candlestick pattern that was hammered down on that low way back on the 10th, and now we've had this 10-day rally coming in to where we are now, and we'll see if this is going to, well, it was a 20-day rally. Let's get that right. Be a 10-day rally, and so this is what we're watching right now in that. But now if we go to the, that's a big thing. That's the German bond, but the U.S. Treasury is far bigger than that. If we take a look at the, market for the 30-year bond, you'll see that we just completed a perfect ABCD pattern to the exact penny at 155.28 level, and that was the perfect ABCD. That was the 786 retracement of the high from back on May the 28th. So we are in a market that is extremely overbought, and this is where you want to be looking for a potential sale in the Treasury bond. So this is one of the reasons why you want to be watching it very, very closely because of this pattern. And it's a perfect ABCD in time and price. In other words, the low from the 25th to the high on the 8th took the same amount of time that we did from the 12th to the 28th. So this is the real test of pattern recognition, is when you have price and time coming together at the same time. That makes the trade the most feasible, because that's where you must make your stand. You're not waiting for a something like a MACD or stochastic to turn up, or a moving average crossover system to kick in. You know exactly at that point that this is where the market should be tired from, and you want to try to get short. And that's what we're looking at for today, is to try to find a place to be short the Treasury bonds. When they were going up, they're going up pretty rapidly, so you don't want to just literally have your order in there, because that doesn't give you the flexibility that you need. So it's better to wait to see the market catch the $100 or the $1 million move, and then see what happens after that high is in. So this is the potential high. Now, how much should it pull back to? The last time that we had a rally like this in bonds, they went from 155 all the way down to 147. So this could be a huge move. I'll put this in, and you'll be able to see that this is what's happening. And that's it. You'll see that what we're looking at here is really a real interesting pattern here in the bond. So we've got to be able to watch it really, really closely. That's the bottom line of what we're looking at here. Okay, now we got the bonds out of the way. We want to take a quick look at the Treasury notes, because that's the largest market of all commodities, is the notes. And I'll lay a 6 to 5 that nobody has been trading this thing, because not many people trade it, because it's a little boring, because there's so much volume in there that it just doesn't jump out very much. And as you'll notice here, that we have some really lower highs here in the notes, which tells us that we've got higher interest rates are coming, folks. The Fed hasn't done it yet, but they're telling everybody they're going to. So when they do it, don't act surprised, and I'm sure the market will shrug it off no matter what happens. But that's the type of thing that we're keeping an eye on here in the Treasury notes. This market, as you can see, the ABCD pattern here in the notes didn't even come close. We couldn't even take out the 786 retracement of the high 8 days ago. That's showing you how negative this note market really is, with selling coming in, anticipating that the Fed is going to raise rates most probably in August or September would be my guess. But it's coming. It's just a question of when it's coming and how quickly. That's the bottom line of looking at what we're watching here early this morning here. Okay, now we want to switch over. We have a question about Apple, so we'll have more questions about that stock than all the other stocks combined, and we'll see where we are. We had a double support coming in on Apple yesterday. It again went down to the 122 level and held that level pretty well. But as you can see from this chart here, we are looking at a situation where we've held the 786 retracement from the July 6th extremely well, but we left this huge gap in Apple, which is an island reversal based on the 2 days, way back on July the 20th and 21st. It left an island after the earnings report. And so we're facing those things in the Apple. But Apple still looks like it wants to go lower, like most of the stocks that we're watching. So that's the key thing that we're looking at. Now, I've had another request to take a look at the IBB, the biotech index, because that's been under some pressure, and we want to look and see. We should be getting into a little bit of support, because yesterday it almost made the exact, well, it did make the exact 786 retracement, but we'll see if that's going to mean anything. However, we have one of the more bearish daily patterns that you could find, and that is, right at the 786 of the low, but we left an island reversal there on the daily basis. That means everybody that bought this during that 7-day period from July the 15th to July the 23rd, everybody in there now has a loss. So that's not a comfortable feeling for those that bought it during that time, but that's what it's about. Some days it's chicken salad, some days it's coleslaw. You just never know what you're going to get. Okay, the next question that we had in the den is about the IWM, the small cap stock. And here again, we have a market that has been under a great deal of pressure after we made the butterfly top here back on June the 28th. And we were fortunate enough to get short that day on that pattern, and the market is proceeding down. And if you'll notice this, we'll just post this in to let you folks see that we have a really nice ABCD pattern forming here, down about another 2 points in the IWM, telling us that we should be heading down to the 119 level in that particular one. Now, we crested early in this cycle when we crested back on June 20th, and we certainly want to, let's try that again, July 20th, and that tells us that we do have a bearishness heading down to the downside. Now, this market actually opened higher today and then went lower, which is usually not a good sign. So we'll just let the market tell us if it wants to continue down. The one thing I feel really strong about, and I could be wrong about this, but I believe we're coming into a cycle low this week, either Thursday or Friday. Thursday, the 30th of July, we have many cycles that are really coming together tight. That Bill Meridian talked to us about it, and on his show, Norman Winsky on Astro Trends talked about it. And we see some things in the Bradley model that are saying the same thing, that Thursday or Friday, with Friday being the full moon, should be the end of the selling, and then we should get a snapback rally of 3 to 5 days. And that's the one you got to pay attention to, because when that one fails, that's like the one we just had in the Shanghai index that went up and then died like a quail. And it was down 8.5% yesterday. It opened 5% lower. China came in with 50 billion RMB to support the market. It rallied to be unchanged, and then it ended up being down another 1.5. So these are the things that we're keeping an eye on here, early this morning. So that's basically what we're watching so far. We want to be potential to be short the bonds here, and also keeping an eye at potential being long the gold and long the silver. Those are the ones that seem to be the ones that look very, very interesting to us from this perspective of catching a short covering rally, and that's what it would be. I don't think it's the major low in gold. It's just a short covering rally, but this is how major lows are made in gold, folks. I know if you stop and think about it, look what happened on the high in that when the CFT published this way back in September of 2011. You had all the hedge funds were long. That usually means there's nobody else left there to buy it, right? And at that time, we were seeing a drop in interest rate, drop in open interest, which is also very bearish. But now we have the opposite. We have more people coming in wanting to play the short side of the gold market, but they came in late to the party. They came in at around 1100, 1150. That's when that big spike in open interest occurred. So somebody was willing to buy it to them as it was going down, and somebody was willing to buy it as they were trying to sell it. So it's a question of who are the strongest holders, the buyers or the sellers. Well, I can tell you from experience, you can't get the public to buy something going down. That's just really difficult to do. I mean, it's extremely difficult to do. That brings a great memory that I had from my days at Drexel, and I started there in February of '76, and I met with Tubby Burnham, John Burnham. He was one of the original of Drexel Burnham Lambert. He was the son of one of the original guys, and his nickname was Tubby. And believe me, he was not Tubby. He was really buffed out. But when he was a kid, he was a little butterball, and that name stuck with him forever. And is really a nice guy, just tremendous humility. And he happened to be at the meeting, and we were sitting there, and my boss was Bob Zussman. And he said, look, he said, you've just become a broker. He said, you have no experience. He said, I can tell you, he said, this is the one thing that you always want to keep in mind, Larry. He said, people are accustomed to making money here. They're accustomed to losing money here. But the one thing they're not accustomed here is to lose all of their money. He said, if you don't lose all of the money, you're never going to have any problems, because they always have a little in reserve, and there's always another, bus coming around. You can put a quarter into the carrier and catch something else. He says, but don't ever risk everything on any one trade. And I'd been I'd done that I've been there, done that. I did that during 1974, and that didn't work out very well. So I already knew not to do that. So that was the extent of my whole preparatory meeting at Drexel, was to tell me that don't risk everything when you're in these markets, because it can be very, very detrimental. That's why if we do try to find something in this gold and silver, we're going to find something at a very, very low risk entry point, much like we tried to do in stocks, and we got a little lucky with that. Remember, don't confuse lucky with smart. We just happened to be there when the pattern was completing, and that pattern worked. A lot of them don't, but that one did. So we want to see what's going to happen with this particular day. Remember, we have a really strong astro date coming in 2 days. On the 30th, we have the full moon coming in on the 31st. So my bet is we should have a down week in stocks, and then we're either going to gap down big time on Monday and start to accelerate to the downside, or we'll have a snapback rally of 3 to 5 days. And that's the rally that you want to watch very, very closely, because that will be the last train to Boot Hill. Because if you miss that one, you won't be a chance to let that body be buried for a long time, because we are in a bear market, folks, in stocks. We've left island reversals in some major things. We made major tops in the NASDAQ with that triple 1.618 expansion, non-confirmation by the New York Stock Exchange Index, non-confirmation by the S&P, non-confirmation by most of the indexes that people look at. And then the ones that did confirm, like the banking index, stopped exactly at the 61% retracement on the weekly. The biotech left an island reversal at a perfect ABCD on the weekly. So these are the ones that you want to give you your biggest your biggest thing. As we're talking today, I'm looking at the prices, and I see that the NASDAQ is now approaching the lows that we made yesterday. That would make, that wouldn't be a very good thing to happen. We're still a good 13 or 14 points away in the S&P, but the NASDAQ, which had been the strongest, is now, the weakest of this. So we've got to, give it a little respect in here, because this is what could happen early this morning. But remember, we've only been trading for 12 minutes, and the early morning sell-off can certainly be, very, very dramatic, and, catch a lot of people by surprise. So we'll watch that very closely. Okay, now, we're almost time to pay some bills here. We'll have to see what else we've got. If you have any questions, it's 877-927-6648. I wanted to thank everybody that came to the webinar last night. We had some, I think, interesting things to look at. And we'll see if these things start to unfold. Remember, they're only patterns, folks. They have nothing to do with the fundamentals of who's buying or where or any of that stuff. It's all about the technical picture of the market and numbers. That's really what we're watching. About as close as I get to fundamentals is looking at the CFTC reports on who's playing where. But no one's ever given me any information, inside information that works. So I would just be a little bit careful of that. So we'll just wait and see what happens here. Okay, we'll take a little break here. We got stocks are now back down on the day, and we'll see what the rest of the day unfolds when we come back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, well, we're back, folks, and we've had a question about copper. Unfortunately, I don't have the ability to pull that chart up right now because it's not something that I keep on my radar. But I did cover this last night in the webinar, and that copper, much like the other metals, is coming down on a long-term support level from 2011. We're right about the 61% retracement down at 222. Well, that's strange. It's the old Gartley number per pound in copper. So we're sort of watching it, but I don't trade it very often. I might trade it once every year. and this would be the time that I would probably do it, but my focus is on silver and gold here. Now, I've also posted into the chart of the crude oil over the last hour of trading or so, because we were waiting for this pullback to come down to the 47 level. We got to 47.06, and so keep an eye on crude, because there's a potential here where we could get some type of a rally. Okay, we've got a call from Sue in Maryland. Are you there, Sue?
Oh, good morning. How are you?
Good morning. How are you this morning?
Yeah, sorry to disturb you again. About the silver SLV and the PAAS.
Yes. Well, yeah. I mentioned before, you're pretty much married to that. So, because you didn't get out of it when you had a chance. So I really think that you have a chance here to see some type of a rally. I spent a lot of time on the webinar last night about that. And the reasoning behind it, Sue, is that there's so many people that are now short that came in late to the party. And the reason why we know that is we had a big increase in open interest as the market started to drop from 1140, in gold down to 1070. So all those people came to the party very late. The same thing happened in silver. But with silver, they couldn't take it into new low ground. We couldn't take out the lows from November of last year, which I think is very, very important. So just hang on for a while, dear. And I know that hope is not a very good trading word, but prayer is. So say some prayers, and maybe the trading gods will bail you out of some of this. But I don't think you're going to see new highs in silver for 5 or 6 years would be my guess. But, I'm wrong a lot, so we'll see.
Oh, no. I have a question that what should level
Sue, the show's coming to an end, dear. Why don't you call in tomorrow, okay?
Oh, okay. So,
all right, thank you. Thank you.
Bye-bye.
Thanks a lot, folks, for joining us.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.